The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Well, hello and welcome to the COB. I'm Nadine Blaney.
And I'm Juliette Sarli. We made it to Friday and it actually has been a pretty good week.
Yeah, you know, when we started out this week, we were a little bit in the doldrums.
Yeah.
And last I checked, Juliette, correct me if I'm wrong, we'd put on pretty
About
much 1.5%.
Oh, over the week, yeah. Today,
over the week.
up 0.5%. Yeah, 1.6% over the week and just 2% off the weekly.
Cheers to that.
Week. It was all to do with us, so we'll take a drink for that.
Yeah, all right, let's look at where the CBOE Australia Index did close, because of course we're just a couple minutes beyond 4 p.m. The last of the day's trades are still coming through the S&P ASX 200, so we'll get there in just a moment, but pretty positive. And it wasn't just here, it was really right around the region as well.
Yeah, absolutely. So a little bit of a China effect too, which really just kind of pushed that oil price up as well, looking like the world's second biggest economy is increasing its demand. That is always going to be a positive, and certainly seen some good moves in some of the energy players. And also, of course, we've got China monthly data next week and some more reads on inflation over the weekend.
Yeah, over the weekend, that will be big. I spoke with Helia Spivak from Tasty Live. And yeah, we went through the charts, but then he talked about China. Actually, I think we just played it on the live stream, didn't we? Yeah. So you might want to seek that out on the website ausbiz.com.au if you care about the fortunes of China, which I think we all do, particularly when we think about the budget next week as well.
So we've spoken to quite a few people about the budget. We're going to have some really good guests next week as well when the budget is handed down Tuesday night, and then of course Wednesday following. I just spoke to Jenna Labib as well from Income Asset Management about some of the moves in bond issuance too, as you're starting to look at the fact that we are in this higher for longer scenario, and of course what Jim Chalmers is really trying to do in terms of helping out the economy but also not inflating inflation.
Tricky balancing act, to say the least. So we will maybe touch upon that with our Friday special guest, a soft spot for Shane Oliver, who will be joining us shortly from AMP. But let's run through some of these sectors. Energy came up in a couple of conversations today. We've got this new government policy, this future-facing energy policy. I forget the exact sort of tagline for it. But I had a chat with Stuart Roberts from Stocks Down Under today. He said, pop the champagne. The adults are back in charge of energy policy, and he is looking to buy Santos, Woodside Energy. He put some confines around, you know, he reckons that Woodside Energy could double, and I don't know the time frame. You'll have to listen to the interview for it. Another pick of his, not on that list, was Tamboran, but you can see there all the major energy plays looking pretty good.
Yeah, let's flip the board. We might have another couple of energy stocks, but what else have we got coming through? So there's some of the smaller ones, but Beach was one of the top performers as well. Let's flip it again and have a look at what we saw with some of the moves in gold as
really
well.
Strong.
Yeah, Newmont up by more than 2%. Gold was kind of hovering above 23, 24, I think. Evolution up by about 2%. De Grey Mining, though, I think there was an update because it was one of the laggards in the overall S&P 500 today, down by 3.5%. In fact, the third worst loser today. Yeah,
we had some plans for a big project coming from St. Barbara as well. Now, the banks, I know you touched upon that with Jenna Labib when it comes to issuances. We've heard from all the banks now. You know, we got a complete picture coming through from Commonwealth Bank yesterday, as you know. The financials, actually one of the best performing sectors, up on a whole by about 1%. But I would think at least some of that has to do with QBE, which we'll get to in just a moment.
Yeah, and having a look at some of the stocks that we focused on, of course, Life 360, I spoke to the CEO. It was one of the companies that came through. Okay, and QBE Insurance was also in focus today. A number of stocks. We'll get to them later. Let's get to our guest.
Oh, why? Why keep him waiting when he's so good and he's going to tell us exactly what we need to know about the week that was and importantly what's to come. Shane Oliver is joining us from AMP. Hey Shane, so actually we've got the bulls back in charge. Is that the story here?
Well, it certainly seems that way. Eurozone shares are, I think, back to or virtually at their highs. The US share market just below it. And of course, the Aussie share market's had a good week. So it seems as if that mini inflation interest rate scare we had through April, of course, made worse by the situation in the Middle East, looks to be behind us. Of course, we've really got to break out to clear new highs before we can say that with confidence, but so far so good. In the meantime, the US share market's been supported by good profit numbers, profit growth through the March quarter. Looks like it's going to come in around 10 or 11%. The numbers are already up around 10%, and there's only a few companies left to go. In Australia, we've seen the RBA in the last week, of course, all that fear about a rate hike coming through. So I'm talking about 3 rate hikes. The Reserve Bank seemed a little bit more sanguine than that, obviously concerned about inflation and putting out lots of warnings, but looks like there's a fairly big hurdle to get another rate hike in Australia. And that chart there is quite telling. It shows that, yes, they revised up their inflation forecasts, but only back to where they were in November. But that's bad news. Obviously, it delays the rate cuts. But they haven't really changed their inflation forecast for the end of next year or the year after. They still see inflation going back to target, which I think explains why they're prepared to look through the bad inflation numbers we had.
Yeah, Shane, I noted that straight after the RBA decision, you sort of came out with your note and you're keeping your call. So the first one in November, still 3 rate cuts in the cycle, which will take us, I think, to 3.6%. What about, though, the conundrum of the budget coming up next week? And I really got a sense from Michelle Bullock. She wasn't going to say maybe what she really wanted to say, but she's hoping that there's not going to be anything that's really going to inflate that inflationary picture.
That's right. The budget is a big one, of course. Although I mean, it's more exciting for economists and financial journalists like yourselves and me. Of course, in a week or so's time, we will have moved on to something else. But obviously, the Reserve Bank will be looking at it very closely. They've always got to be a little bit circumspect around this because they don't want to get into the political debate. But quite clearly, Michelle Bullock wants to see a budget which continues to bear down on inflation in the near term. Yes, they can do some things for the medium term, but we don't really want to see lots of stimulus pumped in the next year or so. And on that front, it's still, I know the government's saying the right things, comments from the Treasurer and Finance Minister and so on, focus on inflation in the short term. But time will tell on that front if they're just solely relying on extra money coming in from a higher tax take as a result of higher than expected commodity prices and personal tax collections, then that may not be taken so well because a lot of economists just look at the change in policy decisions, don't look at that other aspect. And if that's the case, and there is a lot of stimulus pumped in, then it will obviously create some consternation. But it's a difficult one. I think the government does face a bit of a balancing act here. They want to do things like Future Made in Australia. I must admit, I'm a little bit sceptical about that one. They want to provide cost of living relief, but by the same token, they could end up shooting themselves in the foot because if they pump more money into the economy, it means a further delay in interest rates, and we could face a situation when we get to the next election and interest rates haven't come down and we're still going through this debate. So I think the best thing for the government to do would be to try and continue to bear down on inflation, resist the tendency or temptation to pump more money in.
Yeah. All right. Well, that is going to be a watching brief, no doubt. I know you won't comment on stock specifics, but there's a lot of retail investors sort of licking their wounds. And by that, I mean investors in retail here in Australia because of those downgrades that did come through. I mean, it's most certainly starting to be felt in households because they most certainly are spending less at places like Baby Bunting, for example. So, when does that signal really start to tell us what the next move will be and when it will come, importantly?
Well, I think that signal tells us the next move will still be a rate cut. Households in Australia are struggling. We've seen 3 sets of retail sales figures in the last week or so now. Obviously, starting with retail sales last week, the real retail sales number out earlier this week and household spending last Friday, all were soft. We know retail sales are only 1/3 of consumer spending, but all the indications are that the rest of consumer spending is still pretty soft as well. Yes, there was a bit of a swift lift in there for February, but I guess most people, even people like me, say, well, I'm spending on that, but therefore I'll spend less on other things. So that's a drag. And when you look at those numbers there, look at the blue bars, you can see they're down 5 quarters in a row. I know a lot of people look at the nominal value of retail sales and still say it's above its long-term trend. but I think that now largely reflects inflation. Real volumes are running very, very weak. And as time goes by, that means less pricing power for companies. The consumer discretionary retailers are out there issuing warnings because they're at the pointy end of this. But I think it's only a matter of time before services companies are going to see the same thing as well. They won't have the pricing power. You take cafes and restaurants. Australians have loved to get out there following reopening. Suddenly they can do that again, go on a holiday. But I think Australian consumers are going to become a lot more price sensitive going forward, even in those areas. Having got the bunch of the trips out to on the holiday or the restaurant, they'll say, "Well, I've had enough of that, but the prices are ridiculous. I'm going to pull in my horns." So I think that's still working its way through, and the Reserve Bank has to allow for that. You can't ignore that. There's no sign there of an upswing occurring. We are going to get those tax cuts, but that's, for many Australians, that's just $30 a week. It's $30, $40 a week. That's not going to buy you a lot of extra stuff. And I suspect that in the most part, people will use that to pay down their mortgage if they can, or other words, put it to savings. That to me tells me the next move in rates is down, and that's why we're sticking to the end of this year for the start of the rate cuts.
Well, just an anecdote, I did purchase airline tickets this week. I was going to do it last weekend. Canada, I forgot to tell you, not for a while.
Okay.
But, last weekend I was getting itchy fingers thinking I had to book. Waited till Tuesday. They're on sale. I saved thousands.
Oh,
wow.
you got in. Oh, I hate when it happens the other way.
No, I was sort of breathing a sigh of relief. But anyways, maybe that's a sign of things to come. Yeah, probably.
But that's what Australians are doing. That's what Australians are doing now. We saw that boom in retail sales in the month of November last year. And why was that? Because of the Black Friday sales.
Yeah.
So that's what's driving spending. Yeah, when there's a sale on, everyone's out there. But less so in normal times.
I think as well after the pandemic, we realise we want to have our coffee and we want to go on holiday.
Life is short.
Yeah. A quick word, Shane, I just wanted to get, because we had a really interesting chart you gave us on the US earnings growth. I know we talked broadly about global markets, but just what sort of report card you would give earnings season?
Like, I'd have to say it's pretty good. You'd almost give it 10 out of 10. 9 out of 10. 9 out of 10. The reason I wouldn't get it 10 out of 10 was because it was skewed towards tech companies. I think tech earnings are up 38%. Non-tech companies are up something like 1%. So there is a big divergence there. But if you look at the overall stats, they're pretty good. Earnings growth virtually where it was in the December quarter as well, up around 10%. That blue bar will probably end up coming in a little bit higher by the time we get the final 8% of results in. More companies surprising on the upside than downside, more companies than normal, the red dots, more companies than normal surprising on the upside. And it's just worth noting in relation to that tech, non-tech break up, tech momentum in tech earnings seem to peak, I think, around September-December quarter. I said 38%, but it's down from an excess of 40% in the prior two quarters. So it's rolling over, it's slowing down. Still fantastic, it's still doing very well, but it is slowing down. Non-tech is actually starting to pick up. It drove that bit of a slump you saw there through 2023. It's now starting to pick up, coming from negative numbers, now 1% in the March quarter, and it's looking a lot better. So you could argue if the value is going to be found, it's outside of the tech sector in the US. I guess most people would be well aware of that. But so given all of that, I'd have to say that was a very good reporting season. Yet again, American companies are highlighting their resilience, doing very, very well through what was supposed to be tough times. And that has been a key source of support for share markets, even though we have had these wobbles around interest rates.
All right, Shane, thank you. As always, we'll talk to you after, of course, Christmas, which is budget for you next week. Have a good week.
Boxing Day.
Yeah,
Boxing
exactly.
Day.
Yeah, all right. Look forward to it, Shane. Thanks. Have a good weekend.
Okay, you too. Take care.
And just back to some of our corporate stories, of course. And the stock of the day was Life 360. Let's take a listen to what our guests on the call, Claude Walker and Luke Winchester, had to say.
Subscription revenue still actually really is a good business. You really would, consider buying this if it was a profitable company. I would anyway. I would consider there to be some potential of this being a long-term high-quality business. But for that, I really need to see it be properly profitable. That means statutory net profit.
The problem I had, circa 5 months ago, and it's now a much bigger problem, is what are you paying for that potential profitability? And back then it was a 1.2 $1.6 billion business, and today it sits over $3 billion. Now, you know, you can pay a high multiple for a growing earnings stream. Claude with Pro Medicus is the classic example of that. You've got to be ultra certain that earnings stream is going to grow over the medium longer term. And go back to my comments a few months ago, and they still stand true today. I struggle to do that with Life 360. I think they've created a really good business as it sits here today, but I just wonder about the sustainability of the product they offer.
All right, well, we have had a good week. Let's have a look at some of the leaders in today's session. Kicking it off with Sayona Mining and Core Lithium. Now, Helia Group I spoke about earlier in the close. It had that update today. One of the best performers, up 7%. Gold Road and Boss Energy also rounding out some of the winners today.
Yeah, shareholders like a buyback, don't they, with Helia Group? And we saw that from the banks. That was a key theme as well. And gold, I think, as a sector is doing really, really well today. So we'll keep our eye on that through this upcoming session. But Life 360, our stock of the day, was interesting because they made that purchase of a space tech and partnering with a space tech group, Hubble, that you spoke with Chris Hulls about. We'll pop it in the COB newsletter. Some question marks over that. And I think as well, just a few question marks over just growth, always with these companies, and where things go from here. De Grey Mining, I think it has to do with Gold Road. It participated in the De Grey entitlement offer. And Kelsian Group, I don't see any news from it, but down by 2.25%.
Yeah, worth noting, gold was actually up 4.5%, Gold Resources. Let's have a look at, did we get to the small end? Yeah, Red Hawk Mining, Southern Cross Gold. You take it away.
The end of the week.
When you're asking.
Did that happen already? Well, look at that. Southern Cross Gold, just what Juliette was saying, up by 20%. On the flip side, let's just quickly look at this. We've got Findy off by 7.5%, and Vinyl,
the Tinder of the music industry.
I won't forget that now. Down by 6.6%.
All right, consumer sentiment in the US out tonight. A couple of earnings as well, including Enbridge, AMC. That's my bad there. DigitalOcean, I did a spelling error, excuse me. China PPI and CPI over the weekend, and UK GDP.
I don't even know if people would have noticed, Jules, to be totally honest. Looking ahead to next week, though, look, we have the NAB business survey, we have the federal budget, which you're talking to Shane about, we have the wage price index, we have employment and unemployment data, but also really looming large, which we sort of didn't talk about, is the US inflation read. Okay, so, well, we used to say where the U.S. central bank goes, there goes other central banks, but there you go. That's what's on tap overseas. Not so now after we saw the Bank of England really sounding very dovish, the BOE, the Swiss bank cut.
Yeah, Stephen Miller from GSFM telling me that they got the silver in the rate cutting Olympics. That's also up online. That was a great chat with him. I think that was yesterday, as you say. Yeah. It's all blending into one at this point. It might be time for us to go.
Yeah, but we'll just refresh your memories as to where this final figures came in today. There's the chart. Hey, things are coming together. 7,749 for the S&P ASX 200. Okay, up a little bit more of a modest 0.3%. But for week to date, we'll take it, 1.6% gain, even with that selling into the close.
All right, that is it for this week on ausbiz. A very busy week next week. We've got a great budget special coming through on Wednesday. We've got some really interesting interviews as well from some conferences that are occurring in Melbourne. Lots of great guests. So have a great weekend, and also, of course, play catch up.
Yeah, we'll see you then.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You're still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
You better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that. Ow.